Today, we're talking about what you must do before December 31st, 2020. Yes, we say must because if you do the following, you will save a lot of taxes, save a lot of cash. Imagine that. Listen up, and we will go through it. So today, the way we're going to go through this webinar, and I will look at my guidelines in terms of talking to you, but you will just see me. And I think the PowerPoint is getting really boring, and I want to explain to you what I have in mind. And so let's just quickly go through that. My name is Ying, and I am the managing partner and the founder of Community CPA. So 25 years already. So this firm has been growing, and we have been doing a lot of things for the community. And since pandemic, we started doing this daily webinar. So I myself start getting into understanding what Biden's taxes would be. So how his tax would change what landscape of the taxes for the businesses. So I'm into those kind of study, and I'll always be very upfront with you and letting you know what you can do to be better, okay, and to save more money. And I always tell people that the president, whoever is the president, in reality is not important to your business. I say that so bravely because I know I will have consequences if I say it too loudly. But the reality is the real important things you should get and the important people you should get to know are people like myself, people who are into taxes, understand how to implement what you have and match to what the big picture is. And those are the people can have you save big. And, President Trump has done 15 years hotel businesses, and he paid $750 taxes, according to the media. So it doesn't matter right or wrong. I'm just saying there is a way to save your taxes if you really work on it. Of course, at Community CPA, we don't do anything wrong, but we are frugal too. We are not paying tips to IRS. We are paying our taxes, but not tips. Okay, so take what I say with a grain of salt, and don't just take what I say and implement it without understanding it. No, you want to understand why I say what I said, and then go back to study what you have. Okay, so number one, today's topic is what you need to do before December 31st. So I want to run that quickly. Number one, you really should do tax planning with Community CPA. I say that because that is our product. Of course, you will end up paying for a fee, but the amount of knowledge we give you based on your personal situation is it values a lot more than what we bill you for that service. So I say that before December 31st, 2020, and if you have a business, you really should have done tax planning with our firm and with me, so that way you save, okay? And number two, and I want to ask you, are you planning to do some holiday renovation? When I say that, some people, and because of pandemic, they start renovating their store, they start doing renovation on their rental property. So my question to you is, are you doing that? Do you plan to do that? If that is the case, I encourage you to do it because 100% of the renovation you paid for is tax deductible. And they have a special depreciation rules right now. It is going. So your renovation is what we call qualified property improvement that you can write off. So make sure you keep that in mind. If you happen to think of you're going to renovate your door, you're going to do things for your business, do it now, pay it now. And especially if you're cash method accounting on your tax return, you want to pay it off before December 31st. If you're not cash method, that's okay. You get it done. You can do a payable. You can still deduct it. Okay. And number three, PPP. On November 19, if you have followed me on my webinar, and one time I have given you tips, I say something like, oh, if you have PPP, apply for forgiveness next year. So that way you can still deduct your expense, and you don't have to pay taxes on the PPP because it's not forgiven yet. It is your liability, right? And I know I said that a million times before November 19. So on November 19, IRS issued a revenue ruling that is called the 2020-27 revenue ruling, says that as long as you have a PPP, you cannot deduct the expenses that you paid through PPP money, and unless you know for sure you're not going to be forgiven. So they're saying that most of the people will be forgiven. We don't care whether you apply forgiveness now or later, and we don't want you to deduct that expense. That's what IRS said. So I want you to remember that. And when you go back to calculate your taxable income, make sure you take away the expenses that you used PPP money to pay that cannot be on your expenses anymore. So you want to take that out, see how much of taxes you need to pay. For that reason, you should find other ways to deduct more expenses. Okay, so PPP, no more ambiguities, and they want you to not deduct those expenses PPP dollar paid for. All right. And next, NOL. NOL stands for net operating loss. So in 2019 and 2020, the CARES Act said if you have an NOL, that means your sales is less than your expenses, you had a loss. If you have a loss, this loss can go back 5 years to look for the same amount of income that you paid taxes for, and they will return the tax dollar back to you. I'll say that again. So in 2019 and 20, if you got a loss, say you have a restaurant and you always made good money, but 2020, with the shutdown and everything, you actually lost money. You lost $1 million, let's say. But let's say in 2015, you had a $1 million profit and you paid $40,000 taxes for that profit. What CARES Act says that you can take that money, the loss, over to 2015 to reverse that $1 million gain. So you will get the tax dollar back, the taxes you paid back for federal taxes, okay, federal. That federal tax will come back to you. IRS promise to give that back to you in 90 days, folks. So if you're not calculating your gain and loss properly, you probably don't even know that you have money that coming in if you apply for it. So make sure you understand what is NOL, what is net operating loss for 2019 and 20. So in 2019, if you lost $1 million, if your tax preparer didn't tell you you can get money back from before, they're missing out a big time. You want to take that $1 million, go back to 2014, 5 years going back. Of course, if 2014, you haven't even started your business yet, you only started in 2018, then you go back to 18, right? So the idea is you can go back 5 years. So for 2019, you go back 18, 17, 16, 15, and 14, right? You got it. So that is something I want you to consider before the end of the year. Know that what you're entitled to. And maybe you don't have a loss. And maybe you're wanting to renovate your property for $500,000. I would do it in a heartbeat in 2020, create that $500,000 loss. Then I can go back to prior years, right? And the Ying will never tell you something wrong. This is tax benefit is out there, written black and white. If you don't take it, you don't take it. But if you take it, obviously, you are the smart business person, knows how to save money. The government wants you to save money. They want you to use cash to do more things. See, if you do $500,000 renovation in 2020, you create job opportunities for other people. And that is how they make stimulus movement for the business, right? For the economy. So understand that it's not just for your benefit, it's for the country's benefit, for you to spend more so you can get some tax benefit. All right, so the next one, what I want you to pay attention to is if you already received some state grants, and be aware that is taxable income. Don't forget to calculate that into your income. And other than you don't pay sales tax on it, which I know, but you need to pay income tax. So don't underestimate your tax liabilities, okay? Your state grant, that is taxable income. And then the other thing I want to mention to you is before the end of the year, you can still take advantage of payroll tax deferral. What is that? That is your 6.2% Social Security payment that you pay on behalf of your employees. So if I'm, just thinking of one of the client I have, every quarter they have to pay close to $12,000 on the Social Security tax deferral. So now we don't pay it. We keep that $12,000 in the business, and the government said that you don't have to pay it. You can pay $6,000 in 2021 in December, and another $6,000 in 2022 in December. So folks, having cash nowadays is important so you can save your cash and run your business, right? So that's payroll tax deferral. That's another thing I want to mention to you. And what else? What else? That stimulus check. Remember, you got the stimulus check. Some of you maybe made too much money in 2019, so you didn't get it. So 2020 is another shot. If you didn't make more than 150,000 AGI, and you will qualify for stimulus check. So even though you didn't get it in 2019, don't worry, you will get it in 2020. And those folks, if your 2020 income is high, 2019 you got it, you don't have to return it. It's not taxable. So make sure, and basically people should be getting that stimulus check. And if you're not, ask questions and call IRS or talk to us if you're our client, and we can help you to figure out why you're not getting it. You should. All right. Don't forget, the other thing I want to mention to you, don't forget to claim unemployment benefit, right? If you got unemployment benefit, you need to report that on your tax return. So don't forget to put that on your tax return. And, and then, the government will not going to forget you. You'll be dinged. They will send you a CP 2000. You end up being audited. And so don't do that to yourself. And make sure you collect those taxes and putting that properly on your tax return. All right. So now, there are folks are getting what we called minimum distribution from their retirement account, especially folks who are older, and you may be required to take money out of your retirement account, right? And knowing 2020 is so, the market is so crazy, and I don't want you to take money out. You know that you have a year. The CARES Act said people who has to take money out of a retirement account, they don't have to. You don't have to take it. So give it back. If you took it, you can give it back and tell them that you don't want to withdraw. You don't want to do the minimum distribution. It is allowed for 2020. All right. So the next one about early withdrawal. And you can early withdraw your IRA and no 10% penalty if you tell them your withdrawal is for hardship because of COVID. Because once they put that code on your withdrawal, no penalty, and you don't have to pay it all back right away. You don't have to pay taxes on your full amount. They will do taxes 1/3 this year, 2020, the other 1/3 2021, then last 1/3 2022. So if you withdraw $100,000, you only pay taxes on the $33,000 and no 10% withdrawal penalty. So that is a really, I heard people withdrawing the money to do other investment because it's such a good time to do it. But know that they only allow you to draw when you have a hardship. So make sure that you indicate it with your financial planner company so they don't accidentally treat you as an early withdrawal, because once they select the wrong code, your tax preparer don't have a right to change it. They have to report what they are putting on the form. Okay, so that form is 1099-R, just in case you don't know what I'm talking about. And then the last item I want to talk to all of you is donations. It is so interesting about donation. And this is something I consider is the biggest item on the tax planning. A lot of our clients always wanted to do something, always wanted to get a nonprofit and to do a noble purpose they wanted to. And one example would be one of our clients actually had a handicapped child and on wheelchair the whole time ever since he was born. So the our client, the mom, and set up a nonprofit to supply wheelchairs to kids who doesn't have those insurance coverage, has no money to buy the wheelchair, but they have to be on wheelchair. So with that kind of thought, they formed a nonprofit. So this year, it is a opportunity, and you can donate. You can donate 100% of your income to a nonprofit, no limitation. And I say no limitation is because in the past, there is a limitation. The limitation was 50% of your income. So your AGI, let's say your household AGI is 100,000 a year. So in the past, the most you can do is 50,000. But this year, with COVID, the CARES Act said we can do 100%. So what happens if we do 100%? For example, I have a full-time job, say I make $50,000 a year, right? So my employer already made me paying $5,000 taxes. So now I decided to donate 50,000 to nonprofit. What happened to me is because I donated 50,000, so I will have all my income tax returned back to me, and I will have child tax credit, I'll have earned income tax credit. All of these credit for low income people will come through because I donated all of my income to a nonprofit. So that is a personal side of donation. Then the CARES Act also said if you have a business and your business can donate 25% of net income. It used to be 10, now it's 25. So what happened is, let's say if I have a business, I made $20,000 net profit, and I can donate 25% of that. So that is $5,000 I can take out of my profit and write a check to the nonprofit. Of course, the condition is number one, it has to be a public charity, means has to be a 501c3, and it has to be cash. That means you cannot donate a car, you cannot donate some food instead of cash. So it has to be a check, a cash to the public charity. So make sure that you know that is the donation part. Then people will ask me, well, Ying, what do you mean by that? I only heard about $300. Sure, there is another one, another donation that you can do. That is the $300 one. Normally, if you remember, when we have a Schedule A, you put your church tithes and donations inside of the Schedule A, right? Now in 2018, and the Trump Job Act had increased the standard deduction, remember, to 24,000. So a lot of people no longer need to itemize because 24,000 is a lot. So they no longer need to itemize. So the donation you have in the Schedule A doesn't do anything for you anymore. Okay, so this $300 we are talking about is not in the Schedule A. It is sitting somewhere close to where the educator credit, the moving expenses, where they used to be. Remember on the old form, it will be kind of on the bottom. So that is above the line. We call that above the line. When we say above the line, we say above the itemized deduction. So it is not part of itemized deduction. You actually reduce your income by $300. So make sure you have $300 donation that you can claim, okay? That lowers your tax rate as well because it is above the line. It is not inside of the Schedule A. So having said all of that, so we sort of kind of understand, oh yeah, these are the things I need to pay attention. But I left one very big item here, which is called inventory. And a lot of business people has this inventory. I know I didn't mention about inventory earlier, but I want to leave the inventory as a very last item for you because it is so important. And I had done a very thorough inventory explanation in one of my webinars. And I will see you again on Saturday. If you're interested in our webinar, go on to our YouTube, like us, subscribe to us, okay? And thank you for joining the webinar. Bye-bye.